Stock. A stock represents ownership in a company. When you buy a stock, you become a part owner or shareholder of that company. If the company does well, the value of your stock may go up and you could receive profits in the form of dividends. Buying Apple stock means you own a piece of Apple. Share. A share is a single unit of stock. It shows how much of a company you own. If a company has 1,000 shares and you own 10, you own 1% of that company. Dividend. A dividend is a portion of a company's profit paid to shareholders. Not all companies pay dividends. Some reinvest profits to grow. If you own Coca-Cola stock, you may receive a small cash payment every few months as a dividend. IPO. Initial public offering. When a private company sells its stock to the public for the first time, it's called an IPO. It allows everyday investors to buy shares and own part of the company. When Facebook first offered shares to the public in 2012, it was an IPO. Bull market. Bull market means stock prices are rising and people feel confident about the economy. It's a time when investors are optimistic and buying more. From 2009 to 2020, the U.S. stock market experienced one of the longest bull markets ever. Bear market is when stock prices are falling, usually by 20% or more, and investors feel worried. It often happens during economic slowdowns. During the 2008 financial crisis, the market entered a bear market and stock prices dropped sharply. Market capitalization or market cap. This is the total value of a company's shares. It's calculated by multiplying the stock price by the number of shares. If a company has 1 million shares at $50 each, its market cap is $50 million. Index. An index tracks the performance of a group of stocks. It helps measure how the market or a sector is doing. Example, the S&P 500 shows how the 500 largest U.S. companies are performing overall. Portfolio. Portfolio is your collection of investments, like stocks, bonds, or ETFs. A balanced portfolio spreads risk across different assets. Your portfolio might include Apple stock, a bond fund, and some real estate investments. Broker. A broker is someone or a platform that helps you buy or sell stocks. Online brokers like Robinhood or E-Trade make trading easy for individuals. Bid and ask price. The bid is the highest price a buyer is willing to pay for a stock. The ask is the lowest price a seller is willing to accept. The difference is the spread. Example, if the bid is $99 and the ask is $101, the stock might trade around $100. Volume. Volume shows how many shares of a stock are bought or sold in a day. High volume means strong interest or activity in that stock. Example, if Tesla trades 20 million shares today, that's its daily volume. Blue chip stock. These are large, well-known companies with a long record of success, stability, and regular dividends. Companies like Apple, Microsoft, and Coca-Cola are considered blue chip stocks. P/E ratio, or price to earnings. This ratio compares a company's stock price to its earnings. It helps investors judge if a stock is expensive or cheap. A P/E ratio of 10 means you're paying $10 for every $1 the company earns. Volatility. Volatility means how much and how quickly a stock's price moves. High volatility means bigger price swings, while low means more stability. Cryptocurrencies are highly volatile. Their prices jump up and down quickly. Day trading. Buying and selling stocks within the same day to profit from small price changes. It's risky and requires experience. Example, a trader buys Apple stock in the morning and sells it a few hours later for a quick gain. Limit order. A limit order lets you buy or sell a stock at a specific price. It won't happen unless the market reaches your price. Example, you set a limit to buy Tesla at 200. It only executes if the price drops to 200. Stop loss. A stop loss is an order that automatically sells your stock if the price falls to a certain point. It helps prevent bigger losses. Example, you buy a stock at $50 and set a stop loss at $45 to limit your losses. Short selling. Short selling means borrowing a stock and selling it now, hoping to buy it back later at a lower price. If the price drops, you profit. Example, you short sell Netflix at $300, buy it back at $2.50, and keep the difference. Dividend yield. It tells you how much a company pays in dividends compared to its stock price. It's a good way to measure income from a stock. Example, if a $100 stock pays $4 annually, the dividend yield is 4%.